The broadcast is now starting. All attendees are in listen-only mode.
Well, welcome everybody to VADER Online for Advanced Users, presented by the Virginia Bar Association. I am one of your hosts, Dan Gray, with Cooper Ginsberg Gray here in Fairfax. And also on the line with us is Mike Moschke. Mike, you want to introduce yourself?
Yes, hi everyone. I'm Michael Maschke. I'm the CEO of Sensei Enterprises. And Dan and myself are involved here with VADER Online. Dan provides the legal consulting for the changes in the law and some of the testing, and I help with the design and some of the technical aspects. So when you send in a support request, I'm one of the many people that respond to your requests. So as we spend the next hour with you, as we go through the slides and we do some live demonstrations, and Dan will walk through some various scenarios for you guys. If you have any questions, we can answer them as we go along. Just feel free to use the chat box, and I will monitor it on our behalf.
And I've told Mike that he should feel free to interrupt me at any point for questions. We want this to be as useful as possible for all of you. You are looking at your computer at my screen, and I'm going to be scrolling through the presentation, and also I will be logging on to VADER to run some examples for you as we go along. We did want to get CLE credit for this, so there'll be a bit of a review of the law. We're going to look at the relatively new now Pendente Lite spousal support guidelines that were modified and became effective last year in July. Also, we will do a review of the new mixed custody child support guidelines. Now, those aren't quite as new as the statewide Pendente Lite support guidelines, but it is worth going over how we got to where we are on those mixed custody guidelines. We'll do a mixed custody hypothetical, and then I will take you through the various features of VADER, and I may skip around a bit as we go through the different tools that VADER offers you. So jumping right in, and before I get to that, I try to make myself as available as possible for VADER users. So if you ever have a question, I get a lot of questions through emails that are sent to the VADER support email, but you can also feel free to email me directly at my firm email, and Mike is reachable at his Sensei Enterprises email. Always happy to talk with you about using VADER or different legal issues that you're coming up against. To talk first about the Pendente Lite spousal support guidelines, as most of you know, the Tax Cuts and Jobs Act revoked the alimony deduction effective December 31st of 2018. And so unless you executed an agreement or unless you got a court order that dealt with alimony before that date, the alimony was no longer going to be taxable to the person receiving it or deductible by the person paying it. I did do some checking into the Biden administration tax priorities. I saw nothing to indicate that this is going to change in the near term. This administration doesn't appear to have an issue with the revocation of the alimony deduction. So as far as we know right now, this is here to stay. Now, the interesting issue that arose when I gave this presentation in June had to do with modifications of alimony. Generally speaking, the alimony remains deductible if it is modified, anytime starting now or into the future. But it should state that it should state specifically that it remains deductible and taxable. Generally, the way the IRS has issued guidance on this, there is Publication 504, which says, and I'm going to read this to you, amounts paid as alimony or separate maintenance payments under a divorce or separation instrument, and that word instrument is important, executed after 2018 will not be deductible by the payer. Such amounts also won't be includable in the income of the recipient. Okay, we know that. The same is true of alimony paid under a divorce or separation instrument executed before 2019 and modified after 2018 if the modification expressly states that the alimony isn't deductible to the payer or includable in the income of the recipient. So the first thing you have to know is that a divorce instrument is defined as an agreement or a court order under existing IRS regulations. So I commend publication 504 to you. You really should read the entire thing. But the way I interpret it is, if a court order, a divorce instrument, was entered prior to December 31 of 2018 and is later modified, as long as that court order says that the alimony remains deductible and taxable, I think, and some of you may have had cases since then where we've gotten some court rulings, or you may have more recent IRS information. My position is that it remains deductible and it remains taxable to the recipient. So as you read 504, I believe that it sounds like support could still be deductible as long as the court order modifying it states that. So sorry for that little detour. As a result of the Tax Cuts and Jobs Act, we had to take another look at the Pendente Lite guidelines. Now, as you all know, we previously had statewide Pendente Lite guidelines in juvenile court, and those were only passed in 2007. So it's a relatively recent statewide application of the guidelines. Now, prior to that time, many circuit courts in Virginia had developed their own circuit court Pendente Lite guidelines. You had them down in Richmond, which were different than the Fairfax guidelines, which were different from the Ninth Circuit guidelines. And I recently had to look at, I forget what I was doing, but I had to go back and figure out when those guidelines were first instituted. Fairfax promulgated its Pendente Lite guidelines as far back as like the mid-1980s. So those circuit guidelines had been around for a while, but only in a few circuits. Most circuits did not adopt presumptive guidelines. So the question then was, when we were looking at, all right, the guidelines, the IRS rules say that alimony is no longer deductible, the issue arose, okay, well, do we have to revise the guidelines, the statewide Pendente Lite guidelines? And we got varying answers from different attorneys who had been around when those circuit guidelines were promulgated. Some lawyers took the position that, you know, we never really took deductibility into account, because on a Pendente Lite basis, most people were going to end up filing a joint tax return because they got a more favorable filing status. So we never really took deductibility or taxability into account when we promulgated those guidelines. Other lawyers were dead certain that the tax effect was absolutely built in to those Pendente Lite guidelines, and that because you took the deduction away, you had to redo all of the guidelines. I think the bottom line is that nobody really knew for sure whether the guidelines did include consideration of taxes or not. Under the old guidelines, if you didn't have children, the math was 30% of the payor's gross income minus 50% of the payee's gross income. If you had kids together, if the couple had children, it was 28% of the payor's gross income minus 58% of the payee's gross income. And the theory there was, you know, the alimony should be lower because the recipient would also be receiving, presumably, some kind of child support. And of course, the old guidelines were only presumptive up to a combined gross income of $10,000 per month. Under the new guidelines, what is different and how were they developed? The Virginia Family Law Coalition formed an ad hoc study committee that looked at the economics of the guidelines. And I believe it was Larry Deal who chaired that committee. He worked hand in hand with Bob Raymond down in Richmond, and they ran various scenarios to see how removing the tax deductibility would actually impact the dollars in the pocket, both of the payor and of the recipient. And there was a policy decision made that we were going to try to keep the support recipient in approximately the same position as the recipient was prior to the Tax Cuts and Jobs Act. So what ended up happening was the support payer bore a bit more of the burden of the loss of deductibility than the support recipient. Because again, the idea was to try to keep the recipient in approximately the same spot that he or she would have been prior to the change in the law. And that committee proposed legislation. It passed, it originated as House Bill 1500, and it made it through the General Assembly with very little debate. So what is now new? The guidelines now apply to every juvenile and circuit court in Virginia. Now, the interesting issue is the Ninth Circuit runs a very different guideline. And I want to go over that with you at this point. I'll come back to it in just a second because I think it's an instructive example for VADER, and also because as of right now, my understanding is that the Ninth Circuit has not updated its existing guidelines to take into account the new statewide pendente lite guideline. So what is new? The $10,000 monthly combined gross income cap still applies. We reduce the percentage of the payer's gross income to 27% minus 50% of the payees. And when there are children, we reduce the percentage to 26% of the payer's gross income minus 58% of the payee's gross income. All right, I want to show you how this operates in VADER. And so we're going to start from the beginning by logging into VADER. So I'm going to enter my username, and hopefully most of you have been through at least this process for VADER. I'm going to log in, and as you know, we now have two-step authentication. So a code has been sent to my cell phone, and I was logging in earlier, so I hope I'm going to enter the right number here. Let's see, 809-641. And we're in. Okay. So most of you also probably know by now that you've got a couple different options once you get to this page. If you have already been working on a case and you want to upload information that you previously saved, you would hit the Upload Case button. If you want to start a new matter, you hit Start New Case. This also applies if you want to just run a quick guideline, do a back of the envelope calculation because you have a client on the phone and they want to know if my income is $250 a year, what's the alimony amount? So you hit Start New Case. And if you just want to run a quick couple numbers, you hit that Quick Consult button. See, because otherwise what you have to do is you have to, name your file. You create a new file, name it whatever you want. And then one thing to kind of note here is that previously VADER defaulted to husband and wife. Well, now you can use wife, you can use father, you can use husband, you can use mother, or if you want to name the parties by their names, you can enter Martha and Melanie. You can enter whatever you want, and those names will carry through to all of the worksheets. I'm going to go back, and I'm going to go to the home page because I've already saved some information that I want to upload. So I'm going to upload a case, and I'm going to choose my file. And my files automatically go to my downloads file on my computer. This PC downloads, all of my VADER is organized to go there. You can change your configurations, and I'm going to let Mike jump in if I'm saying anything incorrect, but you can change your information, you can change your configurations on your browser to save your your VADER downloads to different locations. Am I right, Mike?
That is correct. Your browser can either be set up to save to a particular location, like your downloads folder or some other folder on your computer system, or the browser can prompt you as to where you want to save it. Sort of like this screen that Dan is showing you here. It would allow you then to navigate potentially to a client folder on your server or Dropbox or wherever your client folders are stored to name and save the file in that specific location.
All right, so I'm just getting a file out of my downloads directory. I had already saved this, and it's chosen file. I've named it. So I'm going to upload this case. Okay, so I know that the name of the file has been correctly uploaded. It's my file that I've named Sussex. It's ready to go. And so what I want to do is I want to look at the support forms. And just to kind of orient people who may not be familiar with it, this is your dashboard on the left-hand side. And this gets you to all the different worksheets that are available in VADER. Now you've got some admin things up here that you can use. I'm not going to click on this because there's private information in there about users and passwords and things. But if you have to add users, if you have to change anything with regard to your firm's setup, this is where you go. You go to admin. Otherwise, most of you are going to be dealing with ED forms, support, tracking, and expenses. Okay, I do want to show you one thing, this VADER online support button. If you click on the FAQs, 90% of the questions that we get are answered on the VADER online FAQs, and there are some how-to videos there for you as well. So what you might do is if you do run across something that you can't figure out, you might check on the FAQs because there's some useful information there. And it also contains a link to email the support email if you have questions. And again, if it's a legal question, those get routed through to me. If it's a technical question, it goes to Mike. Okay, but we were talking about the Pendente Lite guidelines, and what I wanted to show you was a couple things. So we will start with just a generic child support worksheet. Now remember, I've uploaded a case already, so it's already populated with information that I've previously supplied. And the names Harry and Megan refer to the hypothetical that's a bit later in the materials. So this is your standard child support guideline worksheet. You're only going to be figuring out what child support is. And what I wanted to show you was you want to make sure that you're running the most current version, okay? Because this now takes into account all of the recent changes in the law. If for some reason you need to know what the guidelines were before the changes in the law that we've been discussing, you can use version 1. That will run the old guidelines. And that may become relevant because you might have to figure out what an arrearage was from an old order. And so we wanted to make sure we kept the old version in there. But for what most of you are doing from here on out, you're going to want to click on version 2, and that'll give you the most current guideline information. Okay, so you're going to want to run version 2. And what I wanted to show you was a workaround on what I talked about earlier, which was the Ninth Circuit guideline. Now, I always reference the Ninth Circuit guideline because I think it's a really innovative way of calculating child support. What the Ninth Circuit does is takes into account debt service and housing expenses for litigants. And so what you'll see is, let's just play with some numbers. Let's say that Harry is earning $12,000 a month and Megan is earning $5,000 a month. What this does is allows you to take into consideration each of the parties' housing costs, what they're paying for mortgage or for rent. It allows you to take into account car payments. It allows you to take into account work-related childcare, which the other guidelines do take into account. But it allocates these expenses and adjusts the guideline amount and reduces the guideline to take into account who's paying what expense. I'm not going to show you exactly how all of that works right now because there's other stuff to cover. I just want to commend this to you. The problem with this sheet is that if you run it, the child support guideline and the spousal support guideline is out of date. So the workaround for this, you can see right here, spousal support. This sheet calculates it under the old 30-50% guideline, and it shows you that guideline spousal support is $1,100 per month. That is not correct under the new guidelines. So what do you do if you want to use the Ninth Circuit guideline? What you would do is you would run spousal support on the updated guidelines. You'd go back to support, hit spousal support. And again, this is not the Ninth Circuit guideline, this is the statewide guideline. Make sure you're at version 2 current, and you go down and figure out what the guideline amount is under the correct guidelines, and then you go back to the Ninth Circuit and you can adjust the number. You can force the correct number in this guideline, and I'll show you how to do that. Okay, so we're back at spousal support. You've got this line that says proposed adjustments to spousal support. So if you know this number over here is wrong and you know the right number, let's say that the right number was $2,000 a month. You would just come over here and you could say guideline adjustment. And then you would add $900 a month. Okay, so now proposed monthly spousal support is $200. So now you've got the correct number forced in there. Okay, and then when you get to part C, this is where the Ninth Circuit guideline is really unique. It adjusts that number to take into account family debt. And you would do the same thing with child support as well. I think the problem with the Ninth Circuit is that it assumes that you're going to run a sole custody guideline. So again, when it runs the guideline amount of child support for you, like if you have a shared custody arrangement, you have to go to another worksheet, get the correct shared custody number, and force it into these worksheets. But we have gotten some questions about the Ninth Circuit. I think the takeaway is this worksheet is not updated because the Ninth Circuit has not updated its guideline, but you can get to the right result if you run it and then force the proper number. Okay, so we will go back to the outline. All right, so before I get to the mixed custody guidelines, one of the questions the General Assembly, I believe, is going to be adjourning this weekend. I think they may continue this special session. I'm not entirely sure how all that works. But one of the questions is, are there any new changes coming down the pike this General Assembly session year that will impact support? The short answer is no, but there are a couple things that I want to bring to your attention. Both the House and the Senate have eliminated corroboration in uncontested divorces. So for those of you that have always struggled with getting a witness to sign an affidavit, or getting a witness to come to an ORA tennis hearing to corroborate that a divorce, that the parties actually do satisfy the jurisdictional requirements, you know, residence and domicile and when they were married and have they in fact been separate and apart for a full year, we are doing away with that. Virginia was one of only, I think it was 3 jurisdictions that required corroboration of divorce grounds in uncontested matters. And if the governor signs it, which we have every indication that he will, Virginia will no longer require corroboration. I believe that comes effective July 1. Another change that does sort of impact child support, so I will mention it. There is House Bill 2055. That bill, as many of you know, if you go to jail in Virginia, that is, the court cannot use your imprisonment as a change in circumstances and cut you a break on child support. The court must impute income to you under existing Virginia law. And some of you, like me, may have had clients that ended up going to prison, and you file a modification and you do the best you can, and the court says, look, you know that we can't cut you a break on this. This House Bill 2055 states that if you are incarcerated for 180 days or more, the court cannot impute income to you anymore. And that is a federal requirement. The Obama administration promulgated that rule. The Trump administration didn't change it. And given that President Biden was President Obama's vice president, we have no indication that the Fed is going to change its position on this. Virginia is instituting that federal rule. And there's a lot of federal money at stake. We have to implement it, I think, by 2023. So long story short, that bill is now in conference. It may or may not pass out of the General Assembly this year. It might have to get done next year, but I wanted to bring that to your attention as well. There's also a bit of a change in grandparent visitation, but that's kind of beyond our presentation today, but that's something to look out for too. Okay, so I think we've fulfilled our CLE requirements. And now let's get back to VADER. Let's go back to the dashboard. Let's just quickly do a review. ED forms. This is for equitable distribution. Okay, if you're just dealing with support, you don't need to bother with ED forms or equitable distribution forms. That's for equitable distribution and property issues. Support, this right here, this is for child support and for spousal support. Tracking is for calculating deadlines, expert witness designation dates, issuance of subpoenas, that sort of thing. Expenses goes over, that contains the income and expense statements that you may need to use. Model text documents, there are some, and I'll just click on that because this is, I won't come back to this. But you've got updated law clerk checklists for Fairfax. You have some model forms for Richmond. You've got the Ninth Circuit trial form, Fairfax model interrogatories. If there are things that would be helpful for you to see in the model text documents, just email me or email Mike. We're happy to upload them as long as we have permission to do that. If you see something that's outdated, let us know. Our users have been so wonderful about being very on the spot with issues that they've run into. And there have been a couple buggy things as Sensei migrated the worksheets from the Excel format into the online format. And users have been fantastic about spotting issues and suggesting improvements. And I think that Sensei has been pretty responsive to all of those concerns. And there are a couple things that may be relatively new to you that were changed as a result of suggestions that you all made, and I'll try to hit those as well. Okay, so that's model text documents. Let's go to ED forms. And I know that the organization of the dashboard is not exactly the most intuitive organization. The reason it was done this way was as the program was migrated from Excel onto the online version, we tried to keep it as close as possible to the organization of the Excel version, so that people would be roughly familiar with what we were calling things and how those things were organized. I think one of the upcoming projects may be to make this a little more intuitive in terms of, you know, if you're on ED forms, maybe renaming things, particularly for people that aren't familiar with the Excel version. It's not exactly intuitive to know what ED Forms is or ED Funds is. We could be a little more descriptive with those titles. So we're aware of it. When we institute that is up for debate, but just by way of explanation about why these things are organized this way. You're in ED Forms. Now you've got this button underneath for ED Forms. What is this doing? Okay, ED Forms doesn't do a whole lot of math for you. Most of it is to organize your equitable distribution case. So if, for example, you hit the personal information form, this is where you can input personal information about the parties involved in your case: age, education, occupation, employer. Think of ED Forms as a way to organize your equitable distribution case. If you go through each of the forms and you input the information, you're going to have everything that you need for an effective presentation of your equitable distribution. Okay, so I have filled out this particular personal information schedule. What is it actually, and this is the way you kind of go through it. And if these input boxes are too small for you, you can always hit the expand button and go full screen. Makes it a little bigger. It gets rid of the dashboard on the left-hand side, makes it a little easier to see the information that you're inputting. I'm going to go back. Okay, so I've input the information. Now, all right, great. I've input all the information. It's in my file. I'm going to go up and I'm going to download the case at some point to make sure that I save it. But what good does this do me? Well, you have to print it. And what happens when you hit print is that this sheet now turns into a PDF file. And the way my computer does it is I click down here and I bring up the PDF document. So now you can see this is sort of a summary of the personal information schedule and factors for equitable distribution. So at a glance, you can see the names of the parties, you can see their age, you can see their education, occupation, number of years employed in the last 5 years, annual calendar income, all of the things that the court is going to have to consider in its equitable distribution case. You've got the names of the children, you've got significant dates. This is always one that I wish I had at hand in all my cases. I mean, you know, you're dealing with 30, 40 cases at a time and you can't remember the separation date for all of them. So you've got all of that handy right here. The other thing on this sheet that is somewhat helpful is, you know, the factors that you want the court to take notice of in the division of marital property. Is there something in 2107.3E that you really want the court to focus on? And in this particular case, I say Harry's adultery was a negative non-monetary contribution to the marriage. May as well put it on the summary page, and you could use this as a summary exhibit in your exhibit notebook. Of course, many jurisdictions aren't using exhibit notebooks, but you could certainly pull it up on your screen and have that handy. Okay, so I'm going to exit out of that. And oh, I guess I should also say, people are like, well, you know, great, I can print this out, but how do I save it? Once it's open, you just hit the download button. Okay, and again, my computer downloads to my downloads folder, and I would just, under file name, put Sussex Equitable Distribution Sheet. Okay, and then it's going to save it as a PDF, so you will be able to pull it up once you're offline. All right, so that's the personal information schedule. Then you've got the personal property schedule, which is where you're going to list all of the parties' real estate, bank accounts, things like that. Couple things to show you here. First of all, you can navigate to any form at the top, or you can navigate to any form on the side. All right, so you've got two ways of getting to these different forms. Now, this, and I'm going to go full screen. So when you're entering the information, this is what it looks like. You've got property description, date of purchase, title, whether it's marital or separate, debt or lien. And as you go through, you're gonna fill out this information for each asset that you want listed. Okay. Now, this screen doesn't do much for you in terms of it's not all that helpful because you have to scroll down, but this is the way you have to put the information in. And at the end of the day, what does this look like? Well, you hit the print button and it comes up looking like this. So now you can see it's more useful. You got a quick description of the property, date of purchase, title, whether it's marital, whether there's any debt. And what VADER will do, which I don't believe the Excel version did, is it will calculate these different columns for you. So you can see right here that it's added up the marital equity column and put it right here at the bottom. It's done the same thing for Harry's separate equity. It's done the same thing for total value. So the ED forms does do some math, but not as much as the ED funds, which we will go over later. Okay. Now, this is a new feature, and a lot of people said, look, you know, I've entered 10 things and I forgot one, and I want to put it under the marital residence. I don't want to put it at the end. What do I do? All right, now you've got sort mode. So you turn sort mode on, and this is what happens. Okay, now you're looking at a different screen that looks more like the printed out version, and you can move things around. You can put the money market under the checking account. You can put it at the bottom. You can change things around. And that was really a feature that people were demanding because, you know, nothing's worse than entering 15 different items in and realizing that you forgot one and it's a checking account. You want to put it in a particular spot. Well, now all you have to do is just enter it at the end and you can drag it to wherever you want. Okay, so that is sort mode. And you can turn it on and you can turn it off as you need it. So now I'm going to turn it off. Okay, so that's the personal property page. Business property, that is just a place to enter business interests of the parties. So business property schedule, and again, when you print it out, it looks like this. So I've got one business that's described here. You know, if there were more businesses, you could put them down. So I'm going to exit out of that. Okay, stocks. If the parties own individual stocks, they're not held in a particular Fidelity or Merrill Lynch account, you can list those stocks equally or separately. Retirement funds, we've got a separate sheet for that. And again, I'm clicking at the top here, but I could just as easily get there by clicking at the side. You've got a pension sheet, an increasingly rare animal pension. You don't see those anymore except for the Fed, but you've got a pension schedule, and you can put all of the relevant pension information in this. You've got a schedule for debt. Credit card debt, fixed debt, and then you've got a summary page. And what this page will do is summarize. It won't list things out individually, but for example, it lists all of the real and personal property, total value. So at a glance, you can see how large the estate is. and you can give an equal, if you're going to divide everything equally, VADER will tell you what that number is. One word on notes. Now, one of the complaints was, you know, these boxes, let's go back to business property, and I'll show you what notes is for. So you've got business property. You're gonna list your individual businesses, and let's say that you wanna input information that you can't fit in one of the boxes. What you can do is you can come down here and you can drop a footnote. Okay, if one of the boxes in any sheet that you're using is not big enough to contain information, or you want to just draw attention to a particular number, you can drop a footnote here and say Harry's father gave him the business, and click. Oh, and you can expand it if you need to, make it a little bit bigger. Just click on that, and now it's dropped as a footnote. All right, well, what if you want to add another footnote to notes? Just click on that and just do another line, footnote number 2. And you would put this number 2 in whatever box, that you couldn't fit the rest of the information in. So it's on the bottom of each sheet. I know that it's hard to see, but if you have to do an explanation for a particular figure, or you need it to expand the information that is included in the boxes, keep that notes feature in mind as well. Okay, and then at the end is proposed distribution of property. And that's where you go in and you say, okay, wife should get this, husband should get that. And then it's a summary of what you're proposing the court should do in terms of the distribution of property. All right, those are all presentation materials. When you need calculating, you use ED funds, okay? You've got a personal information sheet there as well. And you've also got, it's called source of funds calculation. And this is an example of, we should probably rename that to make it more obvious that this is Brandenburg. All right, so when you click on that, there's your Brandenburg sheet. All right, what does it look like? Those of you that have used the Excel version of VADER know that the Brandenburg sheet looks like this. Okay, you got a description of the property, you've got your itemized investments, and then VADER will tell you what percentage is marital, what percentage is separate. So that's the SOF calculation, source of funds calculation, is Brandenburg. All right. You get a lot of questions about this next sheet, which is property refinance. And I want to say 2 things about this. Number one, 95% of the time, you do not need to bother with this sheet, okay? If the parties are merely refinancing their property to get a better rate and they're not pulling out significant cash, do not drive yourself crazy with this property refinance sheet, okay? This refinance sheet requires a lot of information. You need to get the HUD-1s for each refinance. You have to look at what the mortgage was at the beginning of the prior mortgage and how much it was paid down during the marriage. It's very data intensive and it requires a lot of work. And a lot of users are driving themselves nuts because somewhere along the way, particularly lately because the rates are so incredibly low, parties may have done 5 or 6 refinances to get a lower rate. Don't worry about that unless they're pulling money out of the house, okay? And when I say pull out money, frankly, I probably wouldn't bother with this if they pulled out less than $5 grand, to cover the closing costs. It's only if they pull out a lot of money that you're going to want to use the refinance sheet. Now, the theory behind the refinance sheet is complicated math, and it's we've got about 15 minutes left. It would probably take me 15 minutes to explain Dick Bird, who came up with this refinance theory, to explain his math. He did a Word document that lays out in some detail how you apply Brandenburg to a refinance situation. And if anybody wants it, let me know, or email Mike at some point. We can ship that out to you. And every time I do this sheet and I have to go to court and explain it, I need to review Dick's explanation of the math. He likens a refinance situation to liquidating a money market account, giving everybody their piece of the money market account, and then reconstituting it into a new account. And that'll enable you, if you can comprehend that, it'll enable you to explain the refinance worksheet to the court. Now, the Court of Appeals has never formally adopted this approach to refinance, but if you think about it, it does make sense. So the takeaway there, don't use this unless they're really pulling out a lot of money. And number two, you have to review Dick's theory on refinances to really use this sheet effectively in court. Marital funds, you use this sheet if the parties had a fund that they started during the marriage and that somebody contributed to after the marriage, after the separation. So husband has a retirement account that was started during the marriage, the parties separate, the husband continues making contributions to his marital retirement account, but you want to get those contributions classified as separate, you use marital funds, this sheet. If you have an account that was started prior to the marriage and there's a premarital component, you use general funds, because general funds is a much more complex sheet. It allows you to take into account pre-marriage contributions. It allows you to take contributions during the marriage, and it allows you to take contributions after the marriage. Now, the question some of you may have is, well, why in the world are there 100 are there 100 places to put information for different contributions? The reason is that we couldn't do, the developers could not do an add a line feature here. So we had to put in as many lines as we thought somebody could use. And if you're wondering whether there's any case we've had where there have been more than 100 contributions during the marriage, the answer is probably yes. But for right now, it goes up to 100 separate contributions. You don't need to fill all of these in. They're just there for your use. Okay, so last thing under ED forms, I want to show you the options sheet. This is becoming increasingly important. For a while, it wasn't, because nobody was granting stock options after 2008. But what businesses are doing now is they're granting restricted stock units. Any asset where you have a vesting schedule, you're going to want to apply the coverture fraction to determine which portion of stock options, restricted stock units, performance stock shares, which of those are marital. You're going to apply the coverture fraction. And the option sheet allows you to figure out what portion of things that vest is separate and what portion is marital. You just need to know the number of shares that were granted, the grant date. Let's say that my employer gave me 100 options, and there is it's today's date. Let's say that there's a 3-year vesting period, so 36 months. Okay. If you know what the separation date of the parties is, let's say that the parties separate in June. And we are now at trial is December. Okay. Oh, future date. Of course not. So let's say that the parties separated in, this is where I screwed up my grant date. Let's say that they were granted back in June of last year. And the parties separated in February of this year. All right, VADER will calculate for you based on the vesting period, based on the date the options or shares were granted and based on the separation date, which portion is separate and which portion is marital. And using those different input variables, 25 of the 100 shares are marital, 75 of the 100 shares are separate. And if you divided the marital portions equally, that's what it would be. Okay, so basically takeaway there is anything that has a vesting schedule, you're going to want to use the option sheet, which will tell you what the coverture fraction is. Okay, so we're going to end with support, and we'll go quickly back to the slideshow, and want to talk very briefly about the mixed custody guidelines. These were developed after certain jurisdictions were noticing that they had all kinds of, I won't call them wacky custodial arrangements because they're, it's real life. You had situations with blended families. You had situations where there were two different custody orders and parties were trying to, have their kids in the same house at the same time, stepbrothers and stepsisters, that sort of thing. And jurisdictions were hearing cases with very complex custodial arrangements. And so the Supreme Court asked the Virginia Family Law Coalition to look at the issue. And the coalition formed a committee on mixed custody guidelines. It was headed by Steve Rayner down in Charlottesville. And they looked at three particular mixed custody scenarios. One was where you share custody of all the children. So it's a shared arrangement, but you share each of the kids a different number of days. So son number 1 is with dad 90 days out of the year. Son number 2 is with dad 100 days out of the year. And son number 3 is with dad 110 days out of the year. And you see these situations a lot where kids are like, one's a grade schooler, one's a middle schooler, and one's a high schooler. They all got different schedules. And so there's 3 different shared arrangements that are in place. Then you've got the sole shared arrangement. Let's say you've got 3 children. The older daughter doesn't want to have anything to do with her mother, so she lives with the father full time, but the parties share custody of their other 2 kids. Okay, so that's the sole shared arrangement. And then split shared is, let's say that one kid that you share time with exactly equally, but the other child spends relatively more time with one parent than the other. So these were the 3 arrangements that the Committee on Mixed Custody was going to look at. And these were the scenarios that we were going to try to address through the child support guidelines. So I'll let you look at the materials on your own, but basically what these mixed custody guidelines get away from is, and this is an important concept for all of the other child support guidelines that you see. When you have one child and you've got 2 incomes, you plug one kid into the guideline and the guidelines number, let's say it's $500 a month. If you add a child, the child support does not double. It does not go from 500 to 1,000. It only increases incrementally. So if one kid is 500, 2 kids is 750. That was the way the guidelines were ever since they were promulgated, because the idea was that that first kid was going to be the most expensive kid. Because when you add a kid, now you got to get a 2-bedroom house. Now you got to get a bigger car that has room for car seats. But when you add a second child to that equation, maybe you put that kid in the same bedroom as the other kid, and you can fit 2 in the back seat. So the relative expense of that second child, it doesn't double the cost of that first child. So this was baked into the child support guidelines. The mixed custody guidelines get away from that concept, because to build that concept into a mixed custody situation is just too complicated mathematically. So what the guidelines end up doing, is they basically, you run the guidelines for, let's say you had 3 kids. You run the guidelines for 3 kids, you divide that number by 3, and that gives you a number for each of the children. And if you really study the way these guidelines operate, you can see that we pushed simplicity over that idea of only marginal increase for each additional child. So committee considered but rejected concept of first child is the more expensive child. So that was passed during the 2018 session. Now in our final minutes, we'll run a scenario. Okay, so you've got a scenario, 2 parties. Harry owns his own real estate company, earns $425 a year. Megan earns $120 a year, and you've got 3 children, Brindle, Smythe, and Mayberry. Guess I thought I was being funny when I made this up. I now see that it's really not that funny. In any event, so you've got 3 children. Megan discovers Harry cheating. As you'll remember from my equitable distribution worksheets, that was a factor I wanted the court to consider. Parties have agreed that Harry's going to move out. They share custody of 2 children, Brindle and Smythe, but agreed that Megan would have Mayberry with her primarily until she's old enough to be in preschool. And then you've got some daycare expenses and you've got preschool cost. Okay, so we're going to go to our worksheet and we're going to go to support. We're going to hit mixed custody guidelines, and this is the sole shared arrangement. Okay, so you're going to input the parties' gross incomes. I calculated on a different sheet what the guideline alimony would be under this situation, and I put it in here. So I input that information. And these mixed custody sheets, they're not out, you know, the other child support worksheets, like the combined worksheet, if it's a sole custody situation, it'll also calculate guideline support, but you have to draw a limit with these particular sheets because it starts getting complicated. So I ran guidelines on another worksheet. I put the number in here and the number of other children, and just go through each of these lines to make sure that you're thinking about all the different ways the guidelines operate. For example, Harry is self-employed, right? He earns $35,000 a month. He should be getting credit for half of any self-employment tax he pays out, okay? That's going to reduce his income for child support purposes. I didn't put a figure in there, but make sure you're going through each of these different questions to make sure that you've accounted for everything you're going to have to account for when you run the guidelines. All right, so we put in their income information, we put in the alimony information. First thing we're going to do is figure out what support is for the kid that lives primarily with Megan. So we've identified her as the custodial parent, and she's got sole custody of 1 child, okay? This runs the guidelines based on that income, and the amount of support payable to Megan for that 1 child is $893 a month. Now we got to figure out what we're going to do about those 2 other kids that the parties share custody of. So we go, you've got shared custody of 2 children. And remember, VADER filled that in for you because up here, I said there were 3 kids total, and I input that there was 1 kid that there was sole custody of, and so VADER automatically filled in that we're dealing with 2 shared children, okay? And I assumed that it was an equal sharing, but you don't necessarily have to assume that. You can assume any share ratio that you want. And VADER runs the guideline for these 2 shared kids, and the amount of support payable to Megan for those 2 shared children is $732. If there are any work-related daycare expenses, you deal with it down here. And then VADER does a summary of the different support features. Sole custody, Harry owes Megan $893. For shared custody, he owes her $731. If there are any daycare expenses, this is Harry's portion. And so at the end of the day, the total amount owed is $2,711. Okay, I know I kind of blew through that. Point is that in these mixed custody scenarios, as long as you go through each section, and as long as you're thinking about each of these different lines, you should get to the right result. Multiple shared, this is where you've got more than one kid and you're sharing the child for different numbers of days. Again, put your total number of kids up here. And then what VADER does is, all right, tell me what number of days do the parents have each of these kids? Okay, I did equal sharing of 2 of them and then an unequal sharing of 1 of them. And what the guideline says is that you average the number of days for each of the parents. Again, I could go on for hours about this. Point is, for mixed custody arrangements, this is where you go, okay? If you ever run into any trouble, I know we're at 6 o'clock, always feel free to email me. Sorry that everything I know we threw a lot of information at you, but I'm always available if you have scenarios that you want to run, and I'll let Mike wrap it up for us.
Sure. Thanks, Dan. We do have 2 questions that I need your help to answer here.
Yep.
We were asked, is there a worksheet for 2 kids sole guidelines and then 2 kids shared but different days?
You know, every time you think you see something. so you would go to sole shared. You know, I wonder, I would say you could go to sole shared, but the problem with the shared is that you have to have the same share ratio for all of the kids that are shared. So I don't think you can get there with this sheet. Could you get there? I could get there if you, remember, we're only running a share, with sole shared, we're first running a sole guideline. I have to think about it. I think you can reverse engineer it. You would have to do some combination of sole shared and multiple shared, but I think you could get to where you need to be. But I can't do it on the spot, but I think you could do that.
Figure out a way. Okay.
You could.
Next question in regard to the PL guidelines, especially spousal support, continue to be unrelated to final spousal support in non-guideline counties, question mark.
Mike, one more time.
Here, it says the PL guidelines, especially spousal support, continues to be unrelated to final spousal support in non-guideline counties, question mark.
Well, so 2 things there. First of all, every circuit court and every juvenile court in Virginia should be applying these pendente lite guidelines, period. Now, I think a circuit like the Ninth Circuit, I don't know whether they can get at their particular weird guideline by classifying it as a deviation. I think you'd have issues with that. But every circuit and every juvenile court in Virginia should be applying at a PL level those guidelines, up to $10,000 a month of combined gross income. But absolutely, when you get to the final child support hearing and the final spousal support hearing, child support guidelines are going to apply at that final hearing, obviously, but those spousal support guidelines should not be run. It's going to be reversible error to rely on PL guidelines when determining final spousal support. Now, do I think that some judges run them to kind of get a general sense of what the ballpark ought to be? I think so. And is that reversible error? I don't think so. And I know plenty of attorneys who will say, you know, Your Honor, the guidelines indicate X, Y, Z, even though I think that's probably improper. But those guidelines do not apply at the final hearing. You have to look at 2107.1 and the factors and all the rest of it, primarily ability to pay and need.
Okay, we got a question about the CLE credit. I believe it was approved for 1 credit. You should be getting an email or a communication from the VBA in regard to that. And what is the email address in case we have a question in the future? Again,
Sure.
you can use the navigation of VADER Online and go to support, and there's a link there to email support directly, or the email address would be support@vaderonline.com, right there, as Dan has on the slide.
Yep. All right. Is that it?
Let's see here. Did you say that the ED-RSU section based on grant date? Law is clear on that in every case, question mark.
Yeah, so there's worksheet, which is where you can calculate the marital and separate shares of things like options or RSUs. It applies the coverture fraction. So the grant date is important, but it's also important that if any of the vesting period was served prior to the separation of the parties, there's going to be a marital interest in that. And what that options thing does is calculates the coverture fraction and tells you what the separate and marital portion is. And I don't, at my fingertips, I don't have the case that applies the coverture fraction, but I can certainly send that if that person wants to email me.
Okay. Next question. My office has the Excel sheet or the tracking sheet for Fairfax when doing a schedule order. Is there a tracker now for Loudoun County?
That's a great question. And what we probably ought to do is more and more jurisdictions are moving to it's the, what do they call it? The standard scheduling order. And I think Loudoun is doing that too. We probably should update it to include the different deadlines that are on that. So that's something that we're aware of, and that'll be a job for the programmers. But I think the short answer is you can look at the tracking sheets and look at how it calculates the deadlines, because it has 30 days before trial or 60 days before trial. It'll calculate a lot of the deadlines, but it does not contain this, what they call the standard scheduling order. That's rules. And that's something we probably should change.
Okay. Someone did not get a copy of the slides. I actually just uploaded the PDF to the handouts section. So now you can access the VBA VADER Online Materials PDF right there from this little control box if you did not get them. Let's see here. This person's a mediator. Is there credit for non-attorney mediators? I do not know the answer to that. I do know that that the VBA did apply for credit hours through the state and got approved for 1. So you may want to reach out to the VBA for that question. I think, Dan, I think that is it.
All right. Well, Mike, it's always a pleasure presenting with you, and thanks to everybody who was listening in, and we'll all look forward to hearing from you.
Yep. Thank you, everybody. Have a good night.
Good night.